want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, traders. Happy Friday. We got a long weekend in front of you. Howard Greenberg here, running solo for a little bit. I got the main man, Steve Flanagan. The man will tell us everything to need to know on a macro level and about forex coming in a little bit to help me today. It's been a record-breaking week on Wall Street, and we got a holiday weekend ahead. Markets will be closed, and we will not be on Monday. It is Labor Day. That means today's session is not just about price action. It's about how are you positioning yourself into September, which has a reputation as one of the toughest months of the year for equities. So how are you guys going to get yourself positioned? If we take a market snapshot right now, we've bounced up a little bit. If you see here on the cues from the lows of the morning, we did get down as low as 573 and change earlier this morning before seeing a nice little bounce back after PCE data came out, and we will go over that in a little bit. But the Dow setting to open up down about 104 points, about 23 basis points. S&P futures down about 26 basis points, and the NASDAQ 100 futures look to open lower by about almost 40 basis points or so. That is after yesterday's fireworks, where the S&P 500 closed above 6,500 for the first time ever. That's the 20th record close for the S&P this year. So, BigBeat gets a lot of things, most things right, but I think calling the top here about a month ago might have been a little premature. I do agree with his opinion that we do have some tough times maybe coming into the end of this quarter and beginning of next quarter, but you can't argue with it. Again, our 20th record close for the S&P this year. The Dow Jones also pushed to another record yesterday, and the NASDAQ gained a 0.5 percentage point yesterday, just shy of its all-time high. So, markets have definitely been moving to the upside despite some, shaky numbers across some of the data points. But, rates in the dollar are definitely in focus. We will, like I said, have Mr. Flanagan in soon. I do see the DXY regained 98 here. It had been under a little bit of pressure the last couple of days, so we'll see what he has to say about that. The 10-year treasuries yield is sitting at 4.22 and the 30-year at 4.91. We got to keep in mind that those levels can start to weigh on tech multiples if they keep drifting higher. We're seeing that, in my opinion, across crypto also. As I mentioned, the dollar index has sort of steadied right around that 98 area, and crude oil hasn't changed much. WTI up about 30 basis points here this morning. Tariffs are definitely in the headlines, and traders are keeping one eye on commodities and supply chain costs with all the data that's coming out today. The VIX, again, I'm going to say it, I keep beating the same drum, I know, but I do think it's an important drum to play here. And hey, Ron, how are you doing this morning, my friend? Volatility, VIX 14.3. I talked about it. I bought a VIX spread call here. I'll let you know exactly what I'm looking at. I'm in the 1720 calls for 924 expiration. Again, looking at the VIX 1720. Those aren't long-term holdings. It means if the VIX pops off at any point in the next month or so, I'll take profit on that. It's a hedge against the rest of my portfolio, but one that Scott Bauer always tells us from Prosper Trading, you buy that protection when you don't need it. So I'm in there now. Like I said, though, it is down, right now, right around 14.5, was down as low as 14.3 overnight, which is really calm given the number of catalysts we have on deck. That tells you traders are pricing instability, maybe even complacency. To me, it just shows a little bit of a disconnect. I think that, just a little bit of a disconnect. That market breadth yesterday was pretty decent. Advancers outpaced decliners on the New York Stock Exchange, and 8 of the 11 S&P 500 sectors closed higher than they opened. Leaders were definitely tech and consumer discretionary. On the other side, energy and utilities lagged. The month's basically in for August. So, let's take a look. What was August like? And this is one of the reasons, as I said, that maybe Steve called that top a little high. For the month of August, Dow is up about 3.4%. S&P 500 has gained 2.6%, and the NASDAQ is ahead 2.8. So I will say, for a topsy-turvy month, and I think if you asked a lot of people, probably would have said a month that did not have that strong of a performance, that's not too bad. It's a strong month all around, especially given tariffs and trade policy headlines swirling all month. The sector standouts I'm seeing for August: tech, communications, and discretionary led the way, all up at mid-single digits. Energy has been the laggard, down slightly as oil pulled back from July's highs. Looking at the pre-market trading here, advanced decline about as neutral as you can see, down 21 right now, 21. The tick is up slightly at about 60. As I said, we are not seeing a ton of movement so far. And a lot of the movement we've seen is still AI. Again, even with NVIDIA losing on its earnings and some of these other things, a lot of the record-setting momentum was pioneered and powered by the AI trade. NVIDIA's earnings this week were the big focus, and while the stock ended down less than about 1% after some concerns over its data center revenue, it was enough to keep the AI momentum alive. NVIDIA's report lifted peers and helped push the S&P, like I said, to over that 6,500 milestone. Tom Lee, who I love at Fundstrat, had a good line. We're only in the first quarter of the AI cycle, maybe the first third. That's the narrative carrying markets right now. So today we've got this interesting setups. Markets just notched records. Breadth is supportive, but futures are pulling back ahead of the open here. Is it just a little pre-weekend profit taking or the first signs of exhaustion? That's the question traders are wrestling with this morning. What do you guys think? Is this just a little, did you buy the dip this morning, or are you buying the dip this morning, or are you taking profits going into the Labor Day weekend? And that's going to take us to our first big topic of the morning, the Fed's favorite inflation gauge, the PCE report. It came in at 8:30. And it hit the tape exactly as expected. Core PCE rose 0.3% in July and is now running up about 2.9% year over year. It's the highest since February and the third straight monthly increase. Headline PCE came in at plus 0.2 for the month, 2.6% year over year. As I said, this is right on expectations. It really was not a shocker one way or the other. The markets were bracing for that 2.9. That's what we got. No surprise spike, no surprise relief. As I said, it just sort of hit exactly as expected. With that being said, everybody wants to know, what is the Fed going to do in relation to this? Remember, Powell already said last week that he's more worried about jobs than inflation. And Waller doubled down yesterday, calling for a series of cuts over the next 6 months. I do have to point out, I thought it was funny. The gentleman who's filling in on CNBC this morning said he called Fed Waller's interview an interview for, or his promo for the Fed chairman position, and I would have to agree. He politicked pretty hard yesterday with his talks there. So with the PCE holding under 3%, the Fed is still on track to cut in September, in my opinion. We'll find out what Mr. Flanagan thinks about that when he comes on. And as I said, Powell's pivot has been to jobs over inflation as that main risk. If it had popped up, it might have rattled expectations, but staying at 2.9 keeps the status quo, which would be 2 to 3 cuts by the end of the year. Again, advanced decline pretty flat here, down about 34 right now. Tick is picked up a little bit, but I see a little bit of a slide on the Qs here, down about 40 basis points now. Gold above that 3,400 level nicely, coming in at 34.18 as I'm looking at it. And silver, BigBeat, has got that one nailed almost at the 39 handle here. In fact, it broke 39 overnight. I mentioned Bitcoin and Ethereum both have pulled back here. Ethereum at 110,721, down about 1.7%. Ethereum hit a little harder, down at 4,400 here, down about 2.46%. A lot of that driven by the monthly expiries on the derivatives in Bitcoin and Ethereum. Definitely, the bears definitely won. And the reason I say that was what drove it is they seem to have taken their foot off the pedal here this morning as those futures expired on the crypto side. Already, most of them. You still have CMEs and our Coinbase derivatives to hit later today, but all of the major ones that run off of UTC time, the worldwide ones, they already have expired. So this is what we tend to see going into that. From it, the futures initially paired some losses, as I said, on the PCE data, but it has, started to fade a little bit off of those highs this morning. Treasury yields have stayed pretty steady too. We're not seeing any panic. We're not seeing any euphoria. I do think traders are starting to see this a little bit as a Goldilocks. Inflation not cooling, but not heating up enough to derail the September cut. So still on track there. Big picture, it locks in a strong August. S&P finishes up 2.6, as I said. NASDAQ up 2.8. Dow up 3.4% for the month. But do not forget, September historically is the worst month for stocks seasonally, with an average decline of almost 70 basis points, 0.7% over the last 50 years. That's why today's close will matter. Where do we finish up today, I think, is a little bit of a big one. So the headline today is definitely PCE inflation at 2.9%, right on the screws. It doesn't derail the Fed's September cut path, but it also doesn't give them extra room to ease aggressively. Remember, jobs, not inflation, remain the Fed's priority. Markets get to finish August at record highs, but September will bring some tougher seasonals. And the tariff story we covered earlier means inflation risks remain sticky heading into the fall. Let's get into some of the winners and losers here, the laggards and the winners. There are definitely a bunch of them here. I'll start on the side of crypto here. IREN, I-R-E-N, absolutely crushed it. Now the largest crypto mining company, passing Mara in hash power. The other thing about IREN that has them moving up so much is their shift to also being a data center provider. Yeah, IREN, you got it, Ron. You nailed it. Definitely the big winner. You had asked me about that a few times in the past, I know, and their shift over to the data center AI side paying off for them. They are a preferred partner also to NVIDIA and their data centers. So, again, really nice move up here, up about 20% here. And one of the pure, it's interesting. Mara has made a shift. If you compare and contrast the two largest by market cap, Mara is the other player that matters the most. And what I would say there is Mara has made its pitch to stick in the world of crypto, to double down in the world of crypto. And what I mean there is they've also become a Bitcoin treasury company following in the path of Michael Saylor and MicroStrategy. And, their stock took off on that news. But what you really get, in my opinion, is an amplified effect of what's happening to Bitcoin when you buy Mara. With Iron, you got a little bit of a hedge there in that it's also a play. They've gone the other way. They've said, okay, we've got our core Bitcoin mining company. In fact, we are the largest by hash power, which means they have the most computing power directed at the Bitcoin blockchain, which means they will be the most profitable miner by percentage normally. There is still, it's not an exact science, so to speak, but in theory, those with the most hash power win. But then they're also looking at their bet is let's stay out of the world of owning or buying Bitcoin with a Bitcoin treasury. How about we partner with NVIDIA? How about we partner with all these other AI companies, data centers, and we look at doing what we do best, which is figuring out inexpensive electricity is the most important part of being a Bitcoin mining company. It's the one thing that you sort of the variable that you control. And they do it very well. And they've set themselves up with long-term contracts for energy, especially in West Texas, where they can get, stranded energy, use it. So why not use it to also support these companies that need shared GPU processing and data centers? So I do think great move by IREN. And a little bit different. You can have room for both in your portfolio, but know that Mara really doubling down in the world of Bitcoin and IREN. I would also mention HUT is another one that's doing that same philosophy that IREN is. HUT is also an interesting one because they've pivoted a couple of times. They were originally much more directed as an Ethereum mining company that sort of rotated into then Bitcoin and then became, obviously, as Ethereum changed, they went full bore into Bitcoin and now rolling a little bit again into that data center. So if you're looking for one that hasn't taken off maybe as much, this could be a play still here. Although, again, year to date, they're up 25.64%. And over the last 3 months, up 74%. So they've had a good run already. If you compare that with Iron, though, Iron up 175% over the last 3 months. So if you're looking for a laggard play there, HUT could be a decent one. There are some other players that are doing that also, but those are the two biggest. What else do I have on the lineup here? Let's talk about Elastic, ESTC. ESTC had their earnings report overnight. They jumped. They were up about 16%, up about 13 between the last night's close and today's open now. They blew past earnings and hiked guidance. Revenue came in at $450 million. Up 20% year over year, with an adjusted EPS at around 60 cents versus 47 cents expected. They raised their Q2 and fiscal year guidance, which Wall Street loves. This stock is all about enterprise data search and AI integration. If you don't know what they do, they have very sticky revenues with IT budgets still leaning into the AI-driven analytics. And what I noticed on all the quick analyst reactions is they noted strong customer growth and expanding margins. A big software is still alive. So big software today. We're going to see a couple of them that did well. Another one here on my gainers. Where is it? Autodesk up about 11.59% this morning on their earnings. Autodesk, the design and engineering software giant, popped almost 10%. And now, as I said, over 11% in the pre-market. They came in with an adjusted earnings per share at $2.62, up from the expected $2.45 estimate on the street. And they had a revenue beat, coming in with $1.76 billion in revenue. That is 17% year-over-year growth. Again, they lifted their fiscal year 26 core growth to 9 to 10%, and even gave fiscal 2029 guidance. So where many others are not looking or not willing to look ahead, we are seeing one that is willing to definitely look ahead is Autodesk here, and Wall Street lit up. 12 of 15 analysts lifted their price targets overnight. JP Morgan raised their price target to $319, which is right about where it's trading right now, as this is one of those software as a service names showing durable demand even in a tougher rate environment. So we do see some earnings winners here. NVIDIA may be disappointed. I personally don't think they disappointed, but the market says so. But some of the others are still looking good. Another one that's strong overnight, Affirm, the buy now, pay later company, surged up here almost 15%. And if you count the post market last night, up about 18.5%. Again, they almost doubled the estimate that was out there on their earnings per share. Came in at 20 cents versus 11 cents expected. Good morning, Zora. Ron, yeah, AMBA also. I have that. If you look on my watch list, it's right, the one right above it. You are very much correct there. Affirm's revenue, again, that was a beat also, and it was up 33% year over year. They just crushed it every way you looked at it. Again, they guided fiscal year 26. Their GMV above 46 billion, ahead of consensus. Again, shows consumer spending is resilient even with tariffs and higher rates. For me, this is one that I think is a little, I would say, alarming, is that they're growing so much when it comes to a buy now, pay later. That is definitely the case, is that, again, increasing on their, leverage out there, increasing credit card debt. I don't know that that's a good sign for the street. But BTIG did say Affirm could eventually rival traditional credit card providers. And again, the street loved the expansion of the Affirm card, 1.2 billion in volume last quarter. Average spend now is $4,700 per card holder. So again, it shows you these people are definitely using it like a credit card. The management did say credit quality is holding up, and that credit is their job number one. As Ron had mentioned, AMBA, Ambarello, is another one up nicely here on their earnings, up 17.33% here. They are a smaller chip designer, but heavily tied to Edge AI. They surged almost 20% before pulling back a little bit here this morning. Revenue was up 50% year over year to 95.5 million, and their adjusted earnings per share was a 15 cents, and it beat the estimate of the market that was at 5 cents. So nice little move up here, as Ron mentioned, AMBA. They raised full year guidance 31%, or up to 31 to 35%, up from 19 to 25% previously. And the CEO said demand for AI in drones, robotics, and infrastructure is accelerating. and their first drone production shipments are expected in 2026. It shows a good example of how AI demand is not just data centers, it is flowing out to these edge devices. And I do think drones from both commercial use and military use is going to just continue to explode. Give me 1 second here to send Peter. Peter, I will send that to you over on the Quasar Slack, sir. Our gold expert, Peter Thomas, willing to come on and give us a few minutes here, so we will absolutely take advantage of that. I gotta pull this file. Peter, though, I can't pull that file up, I don't think. Let's see if Peter comes in here and we'll talk to him a little bit about what's going on in the gold market. That'd be amazing. Other things moving up and down today so far. Another one. Oh, market is open here. So we are open. Let's see what we get. First move, AMBA to the upside for sure here. First move. Q's pretty subdued. I don't expect to see much explosions here today. I think we see a little bit of just a day in the markets. So that is what I am expecting to watch so far. Gold at 84.17. So again, I have that 84.41 level as the key resistance so far. That it hasn't been able to get over here on this great run up in since April. So that's still the area for me where I would be a fader, but I would love to know what Peter thinks about that. Should I be fading it at 34.45 area, or are we extending up to the upside still? Q's still right at that 43 basis points to the downside. SPY not much of a move either. DXY is moving up slightly here, back above 98, and we will have Mr. Flanagan on in about 10 minutes to talk about what's going on with the monies around the world. Q's definitely not picking up steam. Let's see what the Mag 7's doing here. NVIDIA down again here. So NVIDIA, I said I want to buy the dip. I haven't purchased yet. I am looking today. Question is, what do you guys think? Does it pull back to this 50-day MA? Do we get a drop towards this 171 area? So do we get a little bit of a sharper entry here? That's the question I have for you. That's a pretty big dip right here on the open. Those usually get bought back up the other way. So I might need to jump in earlier than later here. Good morning, Marilyn. How are you doing this morning? Apple pretty flat on the day so far. Mag 7 pretty flat on the day. Tesla up about 70 basis points here, but not really moving that far anything. Meta's down about 70 basis points. That's about what you got so far. Qs haven't moved much at all. Let's see what's going on here. Bitcoin retracing a little bit, but we're still above the lows of the morning. So we are still bouncing back slightly here. So we'll see what we get across all of them. That's what we're looking at. Like I said, monthly expiry is sort of an expected downside from that. They are recovering from it. Let's look at things that were moving this morning. Did want to point out Open Door continuing to hold up and move to the upside. It is breaking out here. I was going to bring it up in the pre-market. I am interested here. It does look like Open Door. I do see Peter's here, so let's get him in once he gets settled and see what he has to say. Peter, thanks so much for jumping in. How you doing today?
My pleasure. I just ran in. I wanted to send you a chart, Howard. Last week, BigBeat and I have started trying to do a Monday morning recap of what I was looking for in the metals, and we did on Monday. And on that, he said, "Pete, can we see higher prices?" And I said, "Look, we certainly have momentum going for us and there was a good possibility. And sure enough, we just punched right through the 34 area without much of a problem.
Yeah.
And I would like to reiterate, because you do very good technical work, Howard, and I think that 17 to 20-ish number, if we don't close there, if we start bouncing off of there and it looks weak, it's a good scalp, but I wouldn't position into recent new highs, my friend.
Right. That's what I was wondering. It's
Yeah,
to me, it's since about the beginning of April, this 3450 area has been, and you pointed it out to me the first time I remember,
right,
that was the resistance, and that's when you were sort of saying, take your profit and go from the other position you'd given me earlier.
right.
And it's held that range unbelievably right now. Do you see anything on a macro level that could push us through and get us above that 35?
Well, I think we need to reiterate, Howard, some of our conversations of earlier, which is this is as much a geopolitical rally as
Right.
it is a banking rally. The chart I sent you, which we unfortunately weren't able to get up to our viewers, shows a 33-year reversal in gold, and let me clarify that for our people. Gold has consistently been going down against inventories of central banks around the world. For the first time in 30 plus years, we have now seen depositories, major central banks, having more gold in their reserves than they do US dollars.
That is a great segue for Mr. Flanagan, who's coming in next, who, for years ran JP Morgan's automated forex
Yes.
desk.
Yep.
And he, to talk about, because that's been the question. Where are these central bank dollars going? And, my question that I saw with Switzerland, announcing how they sort of reshuffled and they're holding more euros than US dollars also, is this a geopolitical statement as opposed to a technical statement?
Well, I think it's as much a change of attitude. Well, I mean, everyone. Let's pull back and go to our first point, which is geopolitical. Putin has not really come to the table. He came, had a lot of nice pictures, and they chatted a bit. And the next day, he launched 400 drones. I mean, the man is still at war. Nothing has changed. People are dying every day. And that is not what the president of the United States wants. He wants peace. So that has really been the fly in the ointment. And I have to say too that China is still eyeballing Taiwan, even though we do have a strong leader in the White House now. So we have that underpinning, and
Right.
that has been pushing up gold due to. And a lot of people asked me this. I had a lot of questions yesterday on my show. What is counterparty risk? And our next guest, who you're having on, Howard, should answer that as well because he could handle that very, very well. But counterparty risk is, what is that dollar worth? The dollar has been going down steadily, and a lot of people have been watching it on the charts and saying, "Hey, I think I'd rather own gold than I would the dollar." And boy, has that spread paid off.
Yeah, it really has in a big way, and it makes a lot of sense. For me, it's been surprising Bitcoin hasn't got enough of that money, in my opinion, to hold up. But silver has been holding up amazing too. 39. Steve's been calling for 42.
Yes,
So, I
yes.
think he's on his way here. Is that retail, or is that also central banks and institutions?
Well, we had an interesting change, Howard. We had for the first time, Russia said, "You know what? We're not going to send down as much silver as we've been sending, and we're going to start stockpiling it." A couple of other good-sized players said the same thing. So we're seeing the dynamic of silver change a little bit, and people are holding it back from the market, and demand consumption for manufacturing appears in the next couple of years to really going to start to skyrocket in the United States, and we're going to need a lot more silver than we certainly have.
Well, that's something to know for your long-term portfolios there, folks, is, silver is, the industrial use, like you said, is
Yeah,
so big on it right now and not going away anytime soon.
yeah.
What else are you looking at in the metal markets there? Anything else catching your eyes these days?
Well, right now, I mean, I was for almost a year, I was pounding our viewers on Quasar to buy platinum palladium
Yeah,
at $800, and then at 12:30 we started to pitch. Look at I look at it this way: I'm getting 4% on a bill in the bank, and I make 40% in 6 months. I'm pretty happy guy. I don't, I rang the register on all of those. I'm
yeah.
looking at, I know we had a discussion about copper. I bought that 22% break we had after the tariffs, and I'm just holding that and sitting quietly and waiting for copper to all of a sudden to take off. Everyone will be surprised, and there'll be no surprise. But I'm quietly accumulating there, and I've had some of our clients do the same.
And as you know, I've done the same on your advice also, because you are the man when it comes to metals, and,
Thank you.
it's looking at it at a bigger picture than just what is the price saying today. Is, as you said, is where you seem to have a separation. Obviously, is understanding the actual deliverable, what's going on with it, who has enough to supply what we need in the future. And as we pointed out, one of the things that a lot of people don't realize with copper is all of those storms that took out the West Coast,
Oh,
those houses have to have copper plumbing. They can't use PVC, and it's
well,
a huge demand.
first off, there a lot of those homes were high end.
Yeah,
A high end home which has a lot of adaptability, a lot of outlets, a lot of power, not only in piping, but remember this too, Howard. This is very critical. The entire infrastructure melted. All the huge, the 4-inch, 6-inch cable going in melted. All
yeah,
that has to be rebuilt. So you're not only are you looking at 12,000 homes, you're looking at the entire infrastructure, and they haven't even started.
right.
So that is that's going to be a small drop. It's not huge, but it will be taking product off the market. But there's a lot of AI construction which will use a lot of silver paste, silver solder, which is a big consumption point, because remember silver and copper are both electropassage materials. So electricity passes over them very well and at a good speed and at a very predictable speed, which is important in engineering. So I am expecting, as this building continues, to see a lot of underlying support.
Okay. Marilyn's asking us, one of the viewers, which copper stocks, or how would you get access? What would be the way to recommend access to copper?
Well, what I do is and this is personally, and remember how you assume something is directly attributable to your risk profile, Howard.
Right.
And so, in my case, having been a floor broker for many, many, many years, and my father a floor broker for many, many years, so and having generations in it, I use futures, but they have a higher risk, and I just like the idea that for 8% of the face, I can control a large amount of product, but that can come back and bite you.
Yeah. And Marilyn, I would have to double check, but I think you can do that through the through your regular account that we use in the room. So we can definitely look at that.
Yeah,
Um, but
but I'll tell you
there
what,
are
Howard,
there
I
are
got a
ETFs
run.
though that are pretty good, right? Isn't I'm trying to remember the copper ETF.
Oh, I don't know. It's a stock thing, so I
Here
don't
you
have.
go.
have
CPER will work.
okay,
CPER is the United States Copper Index Fund.
beautiful,
So
beautiful.
that's a good one too, Marilyn.
Yeah.
This will work out for you. And I will tell you, the day Peter told me to look at it was the day that it had this big red down candle, and he said, "This is a mistake. It's mispriced." So
Yeah,
that was, if you want to know when I got in, it was that day when Peter hit it. So
yeah.
this would be one CPER. I'll put it into the comments here for you, just so you know.
Yeah, like I said, that's it's not my forte, so I'm not familiar with that. So I'll let you handle that, Howard. Thank you. Listen, I just wanted to pop in for a minute, and I think that that is such an interesting turn of events where we get to see less T-bills in the vault than metal. We
Yeah.
haven't seen it in decades and decades and decades, and I thought it was something that our viewers would be interested in.
Absolutely. Thank you so much, Peter. We appreciate it. Have a great weekend. Enjoy your holiday.
Thank you so much. I'm out the door.
That was amazing getting Peter to come in. He is the man. If you don't know, he was, as it said, a floor trader for the Hunt brothers, the folks that tried to corner the market on the silver. So, and as the main man at AU Secure, he, like I said, where he gives you differences, he knows exactly these folks that, you know, and what they're doing. So market is still dropping down. Qs are down about 60 basis points here. SPY down about 30 basis points here right now. It is bouncing off the lows of the day, but we're still seeing weakness here. NVIDIA, I see, has moved further down to the downside. So like I said, I think it's coming to this 171 area. I definitely am going to be someone interested in getting in there around that 170 area. I do see Mr. Flanagan has joined us to get in the room, tell us what's going on in all the world of Forex. Mr. Flanagan, how are you doing today?
Okay, good morning, Howard, and welcome to Friday. Hope everybody enjoys a nice long weekend.
Yeah, that's the key, is that we have the holiday weekend to enjoy in front of us. Markets can't make up their minds on what they're doing. I don't know if you were listening to Mr. Thomas there, but that was interesting. First time in over 30 years, there's more gold in central banks than U.S. dollars.
That was a eye opener, absolutely. But every time he's on, he's got some really very good information to share with the viewers. So yeah, that was
Yeah,
an eye opener for
that
me.
was, that's great. And that's what's great about Quasar Markets is guys like him and you be able to put that into reference. DXY at 98. What do you think? Where are we headed here?
Well, 98, yeah, we're still closing higher on the week, 97.73 last week's close. And as I said, that Friday was the interesting day because that was the Powell pivot day. So I want to watch that low of 97.56. That's the one I'm looking at. And it just so happens yesterday's low, 97.74. Technical wise, we are still putting in higher lows. I really can't, I don't want to get short dollar. I think too many people are now falling into the has-been trade of just sell the dollar because the world confidence level in the U.S. is declining. And I'm contrary to that position right now. I really think that we're just waiting for the right ingredients to punch us up to the upside here. A lot of levels to go on the upside before we can start jumping in. But I'm not a seller as we begin to break lower. I prefer, if you're going to be, a dollar bear, which just about everybody in the market is, then at least step in and sell it on its rallies.
Right. Yeah. No, absolutely. I mean, I'm not fading the dollar the same way I say I don't fade the Musk. I'm with you. There isn't a better place out there to put your money. Maybe gold right now, but that tends to fade and come and fade. There. And, this week data held up, right? No surprises. We should be on track for the cut. Waller yesterday, you must have liked what he had to say.
Yes, I did. Yep. Step back out of the U.S. for 1 second, just for the viewers. Sure. Let's take a quick wrap around the world here. Swiss GDP plus 0.1, Eurozone consumer confidence negative 15.5, Italian consumer confidence 96.2, another lower number. Tokyo last night. Well, everybody's saying Bank of Japan getting ready to raise rates. Well, now we've got another central bank twisting here because the CPI came in at 2.6%. And that's after a 2.9% the month before. Now, we're fighting 25 years of deflation in Japan. Japan wants inflation, and they want it above 3%. Well, now we're getting rapid numbers coming out that are constantly going lower, which could argue against a rate hike next month in Japan. They are at 0.5%. They could go 0.25% because really what does that have? Well, in Japan, things are a little bit tighter. At 0.5% interest rate, 0.25% would be significant. And then, of course, always consider the Japanese government holds over 50% of their JGBs or their bond markets holdings. So it's a different scenario. But German retail 1.5%, C5, and Italian CPI down 0.2. Around the globe, inflation is not going up. It's still beginning to crater.
Right.
So I get a little worried on the gold trade right now because if we begin a lower inflation, slightly lower, then gold luster. As Peter points out, if the central banks are going to continue to be absorbing the supply out there, it does create a buy the dip scenario. No question about that.
Yeah, and I'm with you. I mean, again, I have it on my chart here at that 34.50 area that it's approaching right now. It's actually moved up as we've been talking about to 34.25. I'm more of a fader at that position than a buyer, but I'm more of a buy the dip guy than a fade at the top guy right now. Because like you said, there's still room for a squeeze. If they're gonna, they might not be done yet. I don't like to try to catch that knife one way or the other.
Right. And as I've emphasized all week, it's a new dawn.
Yeah.
All the old rules are now going out the window, i.e. what I refer to as the United States jumping into MP, the big United States miner of some of the rare earth materials. And then, of course, the Intel. Now, my theory has always been the world is about to reflate, because that's the easiest way to get out of debt. And by reflating, who's the largest holder of gold in the world? The United States. What is the value of that gold? I believe it's like $42.40. Well, if the price of gold is artificially being bought, well, not artificially, is being bought by central banks, limiting the supply, well, simple economics, supply-demand, argues that gold will go up. But if gold is the cornerstone of asset value, values are going to inflate or reflate. This is the playbook they used in 2008. And I have all the comments from Bernanke and all of them was to reflate the world. Well, I think that's what they're hatching out again. Again, it's a new dawn. So, yeah, watch the price of gold going up.
Now you just made me nervous. I was all in with you, and now you just brought up 2008 to a Bitcoiner. That's like the prefaces. That's the worst era of our century.
Well, you have to look at the post 2008.
Okay, well, that I'm okay. Now you had me going there. I'm like 2008. Don't we remember? That's that's what started Bitcoin.
That's the great deflationary, sucking sound where all asset values go into a vortex.
Yeah.
And believe me, as we know from all the movies and everything, that scared the bejeebas out of just about every government official and central banker in the world. Yeah. Something they will go to great lengths to avoid again.
Never again. Right.
When we begin to talk about deflation, because nobody talks about that anymore, one only needs to look over at Asia and see what China's doing. China is not experiencing a inflationary environment. They're getting to that if we look at Japan, 25 years of deflation and how they had to fight that. And to the viewers, it was just recently that Japan stopped what we called ZIRP, the zero interest rate policy.
Right.
So, and, just to highlight another central bank in the world, Switzerland, who you've been mentioning quite often lately, they're at 0% interest rate. And, it is very possible that they may go back into negative. So in a world where everybody's talking inflation, higher rates, higher for longer, we've got to start looking around the world, seeing that others are going down in interest rates to fight what is the worst of all scenarios, a deflationary environment. Now, I'm not saying that we should be in it, but there are examples in the world in some major countries that are beginning to face that fact, and that's a lower interest rate environment. I do not think the United States will get much lower, maybe 0.5%, maybe 0.75, but the rest of the world is already approaching 2% in interest rates. So
right. What do we have on tap next week? I mean, we go into Labor Day here. We should have a quiet weekend, I guess, except we do. I mean, we have to talk about it, right? Putin, Monday, and China, they're all getting together.
Yeah, I don't know if we can assume a quiet weekend anymore.
I know. After I said it, I was like, wait a minute, what the heck am I talking about? I mean,
right. And with the VIX and volatility levels so low, a defensive play is not, and I think that's what the stock market is telling us today. Everybody wants to be a bit defensive. Another defensive signal would be that the dollar is beginning to, move up here. People are so underweight dollars that were anything to happen out in the geopolitical space, the dollar at this point, with sentiment so negative, would get a nice bounce to the upside. So defensive plays ahead of a long weekend are always something that I've done always in my 40 years plus of trading. And I think that that's what the markets are doing today. I would look that nothing comes out. You're going to expect an unwind. So that means you'd probably expect, an up move in the asset prices next week once we get into Tuesday.
Right. Absolutely. I'm with you there. It's going to be an interesting weekend. We'll see if anything comes from that. What else do we have on tap next week to start off September? What are you looking at?
Well, I'm not looking at very much. I think it's going to be, Friday clearly is the unemployment number, which sets the stage for the Fed. But it'll be the second week of September that then starts the next lineup. You've got ECB on the 11th. You then go to Bank of Canada and the Fed on the 17th. On the 18th, Bank of England, and then Bank of Japan on the 19th. So while September typically can be a very volatile month ahead of what everybody always fears is that October. I mean, how many October surprises have we had where down moves and lately some up moves?
Yeah.
But September kind of sets the table. Well, you've got a lot of central banks meeting, and the big one is the Fed. Will they cut? And will this begin a series of cuts? So next Friday will really be, in a short week of trading, will set the table for the month of September.
Absolutely.
A week payrolls indicates a cut by the Fed, perhaps maybe even a little bit more significant than 0.25%, although I think 0.25% is baked in.
Yeah, it's interesting because, it's amazing how the labor numbers don't get worse, but every day I do a headline, it's on another company like Nike this time that's laying off another, 1% of their workforce or 2% of the workforce. Right. Again, I'm not a conspiracy guy, but something's not adding up to me.
Right.
And everybody I talk to is, says how, no one, college graduates can't get jobs and everything else.
Yep. So, what does it mean? Pay attention to the levels. My last, 15 plus years was risk management. And so I'll give you good levels in the dollar. 97.56. If that level breaks in the dollar index,
I already put
the
that up.
dollar is going to tumble. If the dollar tumbles, then there's going to be problems because, as other guests have, talked about, the faith in the dollar holds the entire, financial markets, and we don't want to see a run on the dollar, considering that the dollar for the first half of this year has dropped as much as back into the 70s. So this is nothing to fade and just ignore. Watch your levels very carefully here. 97.74 was last Thursday's low, was yesterday's low, sorry, and 97.56 was last Friday, the Fed pivot day's low. That's the level I'm watching.
I couldn't agree more. And, again, if you're not catching the correlation, what we're talking about here is if that goes, you want to be out of your equities for a little bit. You want to have money on the sidelines. You want to be defensive in your positioning right now. And that's, I started off the show talking about a VIX position. I'm going to end the show talking about a VIX position. Volatility, every expert you've just heard talk to you over the last week here on Quasar has said the same thing. Volatility is unusually low when we're heading into September. That's always a volatile month. So get your protection in place and be ready. Be nimble, right? What's your line?
Money moves first, and that's why I'm giving the dollar index levels. This is where you want to watch, because if these levels break, your VIX and all your other volatility index are going to start to jump.
Absolutely. Mr. Flanagan, thank you so much for helping out and coming in a little early for us. We won't see you on Monday. We will see you next Wednesday here. Have a fantastic holiday weekend with the family, sir.
And you too. Thank you.